Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of November, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the third week of November. And just looking at both these pairs, the moving in inverse directions, of course, and with the spot gold making a significant retracement, pulling back down to the daily 55 EMA and into a support zone, and also breaking out of this triangle right on the start of the week on Monday, while the US dollar index, US dollar against Japanese yen is correlated with the US dollar index and recovering, bouncing off support level from this lower trend line, lower channel trend line, and just above the 149 round figure. So the US dollar has definitely recovered somewhat last week, and dollar yen has attempted to climb back up to retest the recent highs and approaching a next key resistance zone. So let's take a look at what drove the movements for last week, and then look ahead for this coming week, especially with US inflation data coming in. All right. Last week, the RBA did raise interest rates by 0.25% to 4.35, but however, it was seen as possibly the end of the rate hike cycle, so it was deemed to be a dovish hike, and the market just tumbled back down, retraced lower. So let's see what happens in the next, looking forward for the next few months with the next meeting. And the UK GDP did come up higher than expected, but didn't do much with the cable, as it was still retracing lower, and against the US dollar, which was retracing back up. And then on Friday, the US sentiment was sharply lower than expected. So that put a slight pause in the US dollar support movement up, but we'll take a look at the DXY to see how much further it can move up if it's able to find further support. But looking ahead, this coming week will be a critical one for both the US and UK, with CPI data coming up. And both UK and CPI data, UK and US CPI data on just consecutive days, with lower forecast for both as compared to the actual for the previous months. So we'll see if that's will come to fruition with slowing down in the inflation, then followed by US PPI and retail sales as well after the US CPI data. And then some jobs report from the UK and Australia. So major highlights will still be the CPI inflation figures, so for both US and the UK. So that's what to look out for. Right, so we'll need to compare that with the US dollar index, the DXY, to take a look at the price action. Okay, let's move back to the analysis. Let's begin with spot gold. Where right from the start of the week, it did break below this lower triangle trend line here and continued to retrace lower into below the 1950 level and into another interim support zone, which happens now to align with the daily 55 EMA, finding support there. And if we take a look at this is almost like a triple top with a lower high on the previous Friday. And that was the upward triangle trend line here. So it was not able to continue its momentum higher to climb up above its recent high above the 2000 level. So it will need to gather momentum from another support, key support zone. But this week it's let's see if it's able to hold support here or whether it's going to dip down further into the daily 200 EMA and this 786 fib retracement here. Let's take a look at why there's this support zone. There was a previous support here and then resistance and resistance, and that's now support with the rising 55 EMA coming up to provide additional support there. So there's a confluence. So this so-called major support is going to drop back down lower into the daily 200 EMA area. And 1975 is now going to be a interim resistance zone. With 2000 level is going to be the significant resistance now. We take a look on the weekly time frame. You can see that the previous week was, I did mention it was almost like a hanging man, and it did provide the bearish movement and breakdown right down into the support zone for the week, and it dropped a significant 550 to 600 pip move down. Now we could also probably move this fib swing now, and it has fallen right into the 38 fib retracement level. So yeah, we could probably move this here. We could flip it around to show the actual retracement. So until it starts to find support and climb back up, then it could be a continuation move above the swing high, but for now it's a pullback lower from the 2009 level and dipping right into the 38 fib retracement. So probably we could move the major support to the 50 fib along with the daily 200 as a support zone. and resistance. We'll leave it at the key levels for now. So let's see if this week this interim support will hold, or whether it's going to dip lower to test the 50 fib, or whether it's just going to consolidate. So around the 1950 to perhaps 1925 area. Okay, so let's compare this with the US dollar index. See whether the US dollar has found some interim support as well. And here's the US dollar index, where it has also been consolidating within this channel. It's the opposite, the inverse with this falling channel. And it found support at the key level right at the lower channel trend line, and also at the 50 fib retracement. So right on at the start of the weekend, managed to recover back again, also to halfway through to the middle of the channel here. So this is definitely an interim support, but a key one. Major support is still at the 104 and the daily 200 EMA. We can move this resistance back down to 106 to align with the 21 fib and the round figure of 106, as well as the upper channel trend line just slightly above that. We take a look at the weekly time frame. Yes, that's also similar to the inverse relationship with the euro. So it looks like further consolidation for next week until it breaks out of this channel here. And let's see if the CPI and PPI news will trigger this breakout, or whether it's just going to add to the consolidation within this range. And if the inflation figure is coming out lower than expected or as forecasted, so we could see this initially rising and then dropping back down lower. Into the support zone. All right. Let's move back to the other pairs. Let's move on to dollar against Japanese yen, where it has been following the path of the US dollar index and creeping up throughout the whole last week, and climbing back up to break above this upper channel trend line, and looking as if it's going to test the 152 level. If we take a look further back on the weekly time frame, that swing high there was at 151.94. So it's close to within 44, 43 pips to testing that level now. On a weekly time frame, that's a very bullish candle here. It's not engulfing, but it's definitely a piercing line. For now, that's still going to be a significant resistance zone. This is no longer resistance as interim support, just above 149. And perhaps the key support now is going to be at the 138 fib extension, aligning with the 148 round figure. Now, not sure whether it's going to break through the 152 and perhaps just test the 200 fib extension that's at 152.90 before making a significant retracement lower. So not sure whether next week is able to reach that. We have the inflation data coming out, so that's going to be a key driver for US dollar pairs next week. Okay. So we got to watch out for the dollar index and dollar yen, but especially dollar yen, got to watch out for any intervention from the Bank of Japan, as its Japanese yen is getting weaker. So as the UJ dollar Japanese yen climbs further up higher, watch out for any surprises, which has happened before over the last few weeks. There was this sharp drop here for, and I believe there was another couple events over the last month. So watch out for that as the Japanese yen weakens further. All right, so do check out my other videos with the other major pairs, and have a safe week and a good trading week. And cheers for now.